Hello, I am Haras from UKM, and this is my video submission for eastspring springboard challenge, and this is how I would invest 100k as a young investor. So we start off with the allocation. So firstly, I allocated 40%, which is 40,000 to stocks. Secondly, only 50% for unit trust fund, and lastly, the remaining 35% is for real estates. So we start off with the 40,000 that I allocated for stocks. So firstly, I allocated RM12,000 for Maybank, which I expect an annual return of 15% each year. And the reasoning behind this is because Maybank offers a steady dividend. Secondly, I chose Nestle, which I allocated only 10,000, and I'm expecting an annual return for 15%. The reasoning behind this is because the consistent dividends that they give each year. The third stock I chose is Petronas Chemicals, which I allocated 8,000, because I chose this one is because the industrial growth stock, but it only offers a moderate dividend. Lastly, I chose SPDR and S&P 500 ETF, which I allocated 10,000 ringgit, which I expect a 15% return each year. The reason I chose this is because the international exposure for long term and growth and moderate dividend. Next is the unit trust fund, which I allocated 15,000 ringgit for only eastspring Global Target Income Fund, which I did not choose any other unit trust fund. And I'm expecting an annual return of only 5%. And the reason I chose unit trust fund is because the moderate risk fund stabilizes my portfolio. This is one of the main initial plans. So lastly, for real estate, I allocated 20,000 for student apartment, which I'm expecting 9% annual return and a passive income of 75 ringgit, and rental demand. And this is because the rental demand is high and the net yield is 4 to 5%, and appreciation 3 to 4%. And the other 15,000 I allocated for suburban shop lot, which I am expecting also 9,000 annual return. And the reason I chose it because it diversifies property type, plus rental income plus appreciation comes handy. I also allocated the money, which is 10,000 ringgit, 10% of the 100k, into cash saving for high liquidity, and expecting a 2.5% annual return each year. And we'll be expecting flexibility and liquidity. So here are my strategies on how I will be investing my 100k. So we will divide it into 3 phases. So the first phase is the fast growth and initial passive income phase. So this will take from the year 1 until the 3rd year. So in the first 3 years, the goal is fast growth while keeping safety. Stocks like Maybank, Nestle, Petronas Chemicals, and the SPDR and S&P 500 ETF will drive portfolio growth at 15% annually and pay dividends. Unit trusts provide moderate and stable return, which is 5%. Also, real estate will generate rental income, which is 1,550 per year, and appreciate 3 to 4% per year. So the phase 1 outcome will be portfolio growth from 100k to 130,000, and the return of investment we got is 30,000, while the passive income is 306. So the cash will preserve liquidity for emergency and opportunities. Next is the second phase, which is medium term growth plus reinvesting dividend. So you will be from the 4th to 10th year. So phase 2 is very crucial for compounding wealth. Here, dividends from stock and ETF along with rental income will be reinvested instead of spending. So reinvesting these dividends will increase the number of shares you own, so future dividends grow automatically. So the reinvested rental income can improve properties or buy additional units, further compounding growth. So unit trust continues stable at 5%, reducing portfolio volatility. Also, cash will be preserved, flexibility for market opportunities. The phase 2 outcome is portfolio will grow to 219 400k, and the return of investment is 119 and 400k. So the monthly passive income will increase to 296 per month. So the third phase and the last phase will take from the 11th to the 20th year. So this is the long-term growth plus sustainable passive income. So phase 3 will be maximizing the long-term growth while keeping medium to medium high risk. So stock and ETFs continue growing with reinvested dividends, which is 8%. Also, the real estate rental income will grow steadily, and properties appreciation accelerate our portfolio growth. So the unit trust stabilizes return 5%. Also, the cash preserve capital and allows flexibility. So the outcome for phase 3, our portfolio will grow to RM 900,000. So our return of investment is RM 800,000 roughly, and our monthly income will be RM 1,330. So the ROI for the first 3 years is 30,000, and the next 10 years will be RM 119,400, and after 20 years our return of investment is 801,000. Our monthly income For the first 3 years is RM306. The next 4 to 10 years is 296 per month. And then on phase 3, the 11 to 20 years is RM1330. For the environmental aspect, we invest in eco-friendly properties and choose fund that prioritize sustainable practices. Other than that, real estate investment like green buildings or energy efficiency apartment reduces carbon footprint. Also, some unit trusts like eastspring Global Target Income Fund invest in company with strong environmental policies, which help promote clean energy waste reduction and sustainable resource management. For social aspect, we focus on investment that benefit communities and people. Student apartment and suburban short lots provide affordable housing and commercial space, which supports local community. And for companies we choose, like Nestle and Maybank, follow a strong labour practices and community programs, ensuring a fair treatment of employees and supporting social developments. For governance aspect, we prioritize ethical business practices and transparency. We invest in well-governed, publicly listed companies with strong boards and clear reporting. The SPDR and S&P 500 ETF provides international exposure to companies with good governance standard, which reduce the risk of associating with fraud and poor management. By connecting our investment to ESG principles, our portfolio does more than just grow money. It contributes to environmental sustainability, social responsibility, and ethical business practices, creating a positive impact on people, the planet, society, while we still achieving solid returns.